Any better?
A little. You don't have headphones?
No, no, I just run it from the
I'm adding that to your Christmas list.
okay. Um, but I was saying I've been working with Ruben now for 14 years. The other half of our brain here is Lori Millar. She runs our operations department. So behind the scenes, when you guys are turning in a file, you might not know, but it's pretty much coming to my desk and then it's going to Lori's desk. And we pretty much touch every file. So we try to look at things in advance if there's any issues or questions. Then we're pretty much addressing them, as early as possible that we can in the process.
Yeah, no, Ed. Sound is still horrible. Now, that's the comments I'm getting that no one can hear.
Really, I don't know why. Want me to try to log off and back on? Maybe I don't know if that
Yeah,
would do.
do that while I try to move. I get it to connect again.
Yeah. Let me
Yeah. So tech support here says that maybe you're connected as display.
I don't know. Everything I'm seeing looks to be okay on my end. Hmm.
I try to use the computer microphone.
Yeah, that's what I'm using is the computer mic.
Oh,
Yeah. I don't know why it's giving me a problem though. Let me jump off and back on.
Jump off and come back in.
Let me see if that makes any difference. Okay. Okay.
All right, so while
Be right
Ed
back.
gets out and gets back in, today we're going to be talking about FHA. FHA is a loan that for some reason has this misconception that it's not a good type of loan. A lot of realtors have listings and they don't want to see an FHA loan because they just feel that the buyers are not properly qualified. So we wanted to talk about all of these misconceptions and explain the FHA loan, and then a secret one called the 203K FHA loan, which is the loan that you could use to buy a property that needs repairs. So a lot of buyers are working with properties, and a lot of properties in our market need some updating, and you can use that loan. They actually will lend you the money to fix the home. The home just has to appraise in the condition that it's in, and it has to appraise after it's repaired for the value. So I'm trying to get Ed to jump in and see if we can break that down. Okay, Ed, I know you're in. Ed, maybe if you unplug the extra monitors, that helps.
Okay. Testing.
No, still the same.
Still the same, huh? Well, I apologize. I thought we had a good connection here.
All right, so go ahead, enter yourself. We're rocking from here. Enter yourself and tell people don't know you something fun about Ed.
Something fun about me. I used to be in witness protection, and
You
that's
used to be
actually
in
a real
witness
story.
protection. Okay.
I was in witness protection for witnessing a murder because of road rage, of all things.
That's not something fun.
I know,
Oh
but
my
witness
God.
protection was kind of neat for a little while.
Okay. All right, so let's jump into it. Ed, today
My real name is not Ed, by the way.
So today I wanted to talk about two programs that are being not used enough. And one of them is FHA, and then FHA 203K is Streamline.
Yes.
So a lot of realtors that have listings, and a lot of people listening to you here have listings, and they shy away when they get an offer from an FHA buyer because they feel for some reason that this is not a valid buyer with sufficient funds and that they're not going to be able to get to the closing table. So this
Okay.
is myth running around that, oh no, I don't want to take an FHA buyer. I only want a conventional buyer. So what can you say to all of those realtors listening out there for them to understand that an FHA loan, if it's properly done, if it's properly submitted to underwriting, like same thing with a conventional loan, is better than a conventional loan?
Yeah. You need to put that myth to bed, folks. That's kind of an old misnomer for the people who have been in the business a long time. Um, like myself, been in the business now for 32 years, by the way. Um, but FHA, it's 3.5% down, you know, and a lot of conventional loans are going with 3% down. So it's not much of a difference. FHA has lower interest rates typically than conventional loans, right? So why would a buyer not want to take an FHA loan? It also usually has lower mortgage insurance. So a lot of the misconception out there is about the appraisal and extra inspections. And the only thing that appraiser needs to do differently is a head and shoulders inspection in the attic. Other than that, they're looking for the typical stuff, health and safety items. If there's anything that they see, they have to put it in the report. So there is really no difference from a FHA appraisal to a conventional appraisal. And that's always been one of the misconceptions out there, that they have to do additional inspections. They don't. Okay, so we're seeing a lot of buyers going FHA strictly because lower down payment, right? You can do 3.5% down instead of a conventional 5% down, a better interest rate, lower mortgage insurance, and let's not also forget higher debt ratios that are allowed. All right, so on a typical conventional loan, you know, used to be 45% DTI. You can squeeze it up to about 50% DTI if they have good credit, good down payment. FHA, you can go to a 55% debt ratio, and the front ratio, though, is limited to 47%. So that's something you do have to be aware of, is that the housing ratio compared to their income cannot be more than 47. If it goes right above 47, DU, LP will not work.
Okay, so for those out there who don't know what ratios are, without them becoming loan officers, they're sitting across a buyer, they're sitting with a loan officer, and the loan officer is explaining all of this. What do they need to know about ratios, front end ratios and back end ratios?
Okay, so front end ratio is what we call your housing ratio. That's going to be your house payment compared to your gross income. And when I say house payment, I mean total payment, PITIA. So principal, interest, taxes, insurance, and association if there's an association fee. On FHA, that ratio cannot be more than 47. Okay, so house payment divided by your income, 47 max. Then the second ratio is your total debt ratio. That's going to be your house payment plus any debts that we have to count. Okay, so not only credit report debts, but alimony, child support, things like that too, will factor into that ratio. So
Okay.
house payment plus debts divided by your income cannot be more than 55%.
Got it. So everything that you got to pay every month, you got to have 55% of 45% still disposable income floating in your bank account.
Yes, yes.
Awesome.
It's called residual income.
Okay, awesome. So I agree. I think that FHA has been looked at with a black eye for some reason, and I think FHA it's a great program to get buyers into homes, to get first-time home buyers into home. We have the greatest generation of millennials becoming home buyers now at a pace that outpaces any other generation. And there are plenty of opportunities throughout South Florida, and even in Miami, where I'm sitting today. You know, I took a look at the MLS. There's plenty of homes under. Well, actually, let me ask you that question. What is the maximum FHA loan amount today?
In the Tri-County area, it's 621,000.
So 621,000. All right. So let me open my handy dandy Canvas app really quick. Right. And let's do, and I'm gonna do single family homes. I'm not gonna get into condos or any of that stuff. I go just $621,000. Single family homes.
Probably a lot.
So I'm doing Dade and Broward County. Drums, please. For people that tell me there's nothing to sell between Dade and Broward County, under 625 single family homes, there are 3,992.
So there's a couple out there, right?
Yeah, I mean, there's stuff to sell, right?
Yeah, yeah.
All right, so there's
And that's,
3,000.
another thing too, a point is it's not, FHA is not just for first-time home buyers. Okay, we have, people selling their property that had an FHA loan that are going back into an FHA loan. A lot of people just don't want to do the big down payment, right? They'd rather put a little bit of money down, get a low rate, and put the money into the home. Save your cash. Why not? You don't have to be a first-time home buyer.
Okay. Okay. I have a question from somebody asking me, can I do an FHA and add to that a Hometown Heroes, the flavor of the month?
Yes, well, you can do an FHA Hometown Heroes. So yeah, the two programs do go together. If you look at I checked this morning, the Hometown Heroes site, by the way, is down to 46 million left. So July 1st, they kicked out 100 million. It's halfway done. Okay, so Hometown Heroes is probably going to wash out within the next 30 days if it keeps going at the pace that it's been draining.
Right.
But yeah, you can go FHA.
Didn't the governor say that he was going to keep funding it throughout the end of the year?
They say, but even last time when it ran out, there was a big gap before they refunded the program. So who knows, how long that gap may be again.
Okay. Okay. So then you can use an FHA and a Hometown Heroes married together. So, then you're not doing 3.5% down payment, or what are you doing?
Well, you're getting 5% down payment assistance from the Hometown Heroes program. So the only thing you're really coming up with is maybe a little bit in closing costs. Okay, so you still have to do the 3.5% down. You're getting 5 from the program, so you're getting another 1.5% to go towards your closing costs. So any other assistance, because you could still do seller concession up to 6%, by the way, on an FHA loan. Okay, and you could literally have somebody walk into the home for the price of an appraisal out of their pocket, or their inspection fees. No other money out of their pocket.
Yeah. So to everybody listening, yesterday I had a call with Ruben regarding an FHA 203K loan that you guys are about to close. And when we were balancing, because they got all of this money, the buyer had more money than he needed. There was an extra $2,500.
Yes.
Which, to have an approved buyer with an extra $2,500 in his pocket, it's a good problem to have, right?
Yeah, and we actually see that on a lot of the Hometown Heroes loans, because they're getting too much money. And then you can't be getting money back at closing on the CD. So I'd say about half of the Hometown Hero loans that we're doing, we have this last minute scramble where we have to actually reduce the loan amount because they're getting money back. So that's one of the things we're actually trying to talk to our folks about here, is don't set it up where they have a credit, on the initial LE. Set it up where they're coming in with maybe $500, so we don't hit that little hiccup at closing.
Okay. So for anybody listening to you, like I said, you have a huge crowd here and a huge crowd online. I highly recommend, especially after August 17, that every conversation with a buyer is had with a loan officer in person or via Zoom, because this needs to be a team effort. So what do we ask that buyer to bring to that meeting to make sure that we get them pre-qualified? What do you want to see for an FHA?
It's the standard items. It's 30 days worth of pay stubs. It's 2 years worth of tax returns, 2 months worth of bank statements. One of the things you really need to pay attention to, and this is something we see kind of frequently, is not really reviewing the bank statements. Okay, so when you're looking at an FHA loan, anything over 1% of the purchase price on a deposit into the buyer's bank statement is considered a large deposit. And we've had a lot of cases where, they weren't really looked at, and we had to say, okay, well, what's that large deposit? They can't explain it, and then we can't use that money. Okay, so we really do want to see the full 2 months of bank statements, 2 months of financials, 30 days of pay stubs. And another thing is ID. We have a lot of people coming into the US. We have a lot of people coming into Florida that are non-permanent residents. So we really need to know up front, what is their employment status, okay? So the things that we're going to need there is their employment authorization documentation, what we call their EAD card, or they may have a work visa, okay, because some categories are just not allowed. And we really need to know that up front. You know, if they say I'm a resident, okay, great, then let's see your resident card. But we don't want to be surprised later, and then they say, oh no, I have an EAD card, I'm not a resident, and then we have to try to figure out if they're still eligible for the mortgage. Okay,
Okay,
so
so ID,
questions.
30 days, tax, pay stubs, and what else?
2 months bank statements, 2
Month
years
bank.
financials, either W-2s and pay stubs if they're an employee. If they're self-employed, then we need 2 years of their tax returns.
Okay, and the magic word, credit scores.
So we can go down to 580 on an FHA. That would have to 580 is our minimum. We would have to have an approved eligible on anything below 620.
You need to be breathing, right? At 580.
Yeah, well, we do check for pulse, all right, and we take a temperature.
Okay.
Okay, but I mean, FHA technically goes down to 500, but it's very hard to get them through. So at 580, we'll take them as long as we have an approved eligible with DU.
Okay, so for the buyer out there that's listening, or for the real estate agent that is listening, it's do not shy away from that client. Come sit down, have a conversation, and see where does their peg fit in.
Yeah, right. So then we're getting into the number crunching. We're getting into the debt ratio, analyzing credit. It's very important to look at a credit and see if there's any charge-offs or collections, because with FHA, you do have to count a portion of the balance if they have collections that are over $2,000. So again, a little something that kind of will snag somebody if they really don't know what to look for. In a lot of cases, if they have disputed credit items, if their disputed credit item is over $1,000, then that dispute has to be removed. Now, if the dispute helped their credit score because they dispute it, it stops that credit item from decreasing their credit score. If we have to remove the dispute, their credit score may take a dive. So it's again something that you want to look at up front, and if we have to do a rescore, then we want to do it early in the process to see how that's going to affect their score.
Okay, so then it's better to do this thing in person if possible.
Early, yes.
Early, so you can plan a strategy, correct what needs to get corrected, and move on.
Yeah, it's basically comes down to a thorough pre-approval, which is really what, you know, we kind of preach to our folks is, you know, if they tell you they make $60,000 a year, that's great, but I want to see it. I want to see your pay stub. I want to see your W-2. Okay, just not go off of verbals.
So Ed, if I'm making an offer to XYZ Realty on their listing, and I know, and the listing agent is telling me that they don't feel comfortable with an FHA buyer, would you or members of the CMG team reach out, have a conversation with that listing agent, explain the case, explain as much as they can about the buyer to make sure that we can get that offer either accepted or counter?
Absolutely.
That's something you guys do?
Yes, absolutely. Because the main question again is why. Okay, when they say I don't want an FHA buyer, I say why, and ask them to tell you. Okay, because most of the times they're going to say, oh, well, we're afraid about the inspections. Okay, well, there is no difference. Like we said earlier, okay, there's no difference. So is there something wrong with the property? You tell me. Okay, and if they say no, then okay, then let's take that off the table. Okay, but yeah, you need to ask them why. But we have no problem getting on the phone with any listing agent and explaining the credit. Obviously, we can't release buyer personal information, credit score, how much money they have in the bank. We can't tell them that, but we can tell them that we have a solid candidate to purchase that home.
Okay. I had a question. What is the credit scores for Hometown Heroes, the guidelines?
HTH is 640.
640.
But we have another program. It kind of counters the Hometown Heroes. I don't know if anybody's heard of the Chenoa down payment assistance program. Okay, but the Hometown Heroes, obviously first-time home buyer, and they have income limits. Chenoa don't have to be a first-time home buyer, no income limits, and the rates are not that much different than Hometown Heroes. Okay, so we've had a couple of cases where we looked at the file, oh, it can't go HDH. Go Chenoa. And we've gotten done that way with the down payment assistance. And they also offer up to 5% DPA. So another good alternative.
Okay, so we might have to do next Thursday or that, talk about Chenoa.
Chenoa.
Chenoa. One quick question before we jump to 203Ks. Can a buyer use an FHA loan if they're here on a temporary status, they had a TPS status for 12 months already?
It depends on the type of visa. Temporary statuses are usually not eligible. Okay. It's something that we would run through our underwriting department or do it as a TBD file. Okay. But temporary are tough to get through on those type of visas. Now, the other status that we see a lot of is the CO8, which we've been seeing a lot of from the recent immigrants coming in. And those are now acceptable. For a long time, FHA was not taking them, but now they do.
Okay, so on a case-by-case basis, speak to your loan officer, CMG loan officer, and they can assist you with that.
Right, but again, it's gather the info, and we could run it on a pre-flight through our underwriting department. So we would want to see the visa that they have, EAD card if they have one, and then there's a form called the I-797 form, which is what they would be submitting for their renewals or any type of change of status they were trying to get. So we would want to get all that stuff up front and then submit it for a pre-flight.
Okay, awesome. One last question before we go to 203K is how much of the Hometown Heroes can a buyer use towards down payment? Can he use all of it? Can he use for down payment and closing costs?
Yeah, well, they're getting 5%. Down payment on an FHA is 3.5%.
You got 1.5% for whatever you want.
So they're getting an extra 1.5% to use towards the closing costs.
Okay.
Mhm.
All right, so then let's talk about the other elephant in the room, the FHA 203K streamline. I know we only got 6 minutes left.
Everybody gets scared of when you say 203K, people get scared.
Yeah, I don't know why. They think it's a machine gun or something when you get 203K. So
No.
there's a lot of properties, especially in South Florida, that are older homes from the 50s that have not been updated, right?
Kind of like us.
Yes, exactly like us. Most of them have, roof needs to be redone to get a cheaper insurance and windows. And so a lot of buyers shy away from these properties because they're like, oh my God, it's going to cost me so much that I don't have to get new roof and windows. And then there's nobody talks about this secret loan that FHA has for first-time home buyers to come in, buy a house, and fix the things that need to get fixed. So what is a 203K streamline? How can someone get it? And why is no one talking about it?
Okay. Because again, I think the old FHA misnomer, 203Ks, it's a construction loan really, right? So people get a little, scared about things they really don't understand. But at the end of the day, as far as the qualifying, we're qualifying the buyer on the end loan, okay? So it's no different qualifying than a regular FHA loan, except in between, you have a closing, right? You're paying off Mr. Seller, and then you have the construction money that's going into escrow, and then that money is going to fix the property until they're able to move in, until they get a CO. But I'll start back in the beginning of it. There's two versions of the 203K. There's the limited K, which allows you to do construction up to $35,000. And then there's the full-blown, the standard 203K, where you could go as high as the FHA county limits. So back up to, 620 something thousand. Okay. So if you're buying a property for 500, you still have another, 120 to use towards construction. But I'll make another comment on the limited K. The 35,000 is the cap, but that also has to include what they call a contingency reserve, which could be anywhere from 10 to 20%. So let's call it 15%. So by the time you get done with the construction money, the contingency reserve, and the fees that go into the deal, you're really limited to about $30,000 in actual repair money. Okay, because the rest of the 5K is going to get eaten up by the reserve, the contingency reserve, and fees. Okay.
So I was just looking up a scenario. I'm not going to show it because but it's a single family home, 3-bedroom, 2-bath. It's in between Palm Springs North and Opalakas in that little corner there.
Mhm.
Comps in that neighborhood are a 620. The house they're asking 549 and it needs a new roof because it needs a new roof. So those and so in a case like that, you do the contract price on 549, but you're applying for a $600,000 loan or 610. The property appraises at 610 with a new roof, and then that money, the extra $50,000 sits in escrow for a new for to pay for a new roof, right? Pretty much that's as simple as it is.
It's as simple as it is. It's you don't overthink these, okay? But that's a perfect scenario where, okay, if somebody wanted to, move it to a property and then they had to go pay for a new roof, right? 50, 60K, whatever it is, what are they going to do? Credit cards, go get an equity line. They may not be able to get an equity line because they just moved into the property and there's no equity yet, technically, right? Okay. But when you build it into the mortgage and now you're financing that 50K over a 30-year loan, all right, what is $1,000, an extra thousand, but maybe $5 per month. Okay. So that 50K, added to the loan is maybe another $200 as compared to putting that on a credit card, which is going to cost you a hell of a lot more money. Okay. Yeah. So if you could put that into the loan and finance it over 30 years, by all means, do it. Little bit different interest rate, maybe a quarter different than a regular FHA, sometimes a half different than a regular FHA for a 203K program because it technically is a construction type program. Okay. But still well worth it. Well worth it. The main thing, and I'll every time I've seen a 203K, the GC is the important part of the equation. Okay. Because there's paperwork involved.
Can it be my uncle if I'm the buyer?
Probably not, unless your uncle is a really good GC, licensed and insured. Okay, then he's good. But if the GC, if it's, cousin Freddie who can't do any paperwork and isn't licensed, isn't insured, we're not using cousin Freddie. Okay, the GC has to fill out some paperwork. The 203Ks that I've seen screwed up, it's mainly because the GC screwed it up. It's not because of buyer, seller, lender. The GC's got to fill out some forms, get them in timely. Okay. So my advice is if you're looking at a property and it needs a new roof or whatever like that, the first thing you want to do is get somebody out there to get you an estimate. Okay. And you can be doing this during the inspection period. All right. Bring in the contractor. I need this done. I need this done. We need a roof. We need some windows, whatever it is. We need flooring. Get that on the estimate. And then we want to get that moving early. Okay. So we want to get that moving early in the process.
We're running out of time. So yes, two questions. How many inspections and how many appraisals do you need for these type of loans?
So you need just one appraisal because when we order the appraisal, we're sending the purchase contract and we're sending that GC estimate. Okay. And we're asking the appraiser for two numbers, the as-is number and the as-improved number. Okay. And then our maximum loan amount is based off of the lesser of those equations. Okay. But in most cases, you're still winding up with, regular loan amount and 3.5% down. Okay. So it's no more down payment and it's, just has to work. The numbers have to work. What was the second part of that question?
One inspection?
So the inspections depend on the draws. Okay. So if they're going to, submit it with let's say they want 3 draws, each time we do a draw, there's going to be an inspection.
Yeah, but so one property inspection when you're on the contract and then an inspection to verify the work has been done after closing.
Right. So they're going to give us a draw schedule at closing, and if it's 2 draws, then each draw is going to have an inspection and then a final. Okay. So we are going to send the appraiser back out there to do a final.
Down payment?
3.5.
3.5.
3.5%.
Hometown Heroes also qualifies for 203K?
No.
Okay. Because it's a separate product.
Yeah. 203K is a construction loan. Hometown Heroes is not playing ball with that one.
Okay. All right. Well, Ed, thank you so very, very much for all your time today and jumping in. I think the FHA loan is not being utilized as much as it should be. Like I said, I just took a peek and there's 3,900 homes between Dade, Broward, and South Palm Beach that qualify for an FHA buyer. So when whoever says, you know, I cannot find inventory, I guess they're not truly looking. And I was just looking at single family homes. I wasn't even looking at condos. I wasn't going to touch on that. So there are a lot of entry level homes available. And if the home needs roof, windows, or some cosmetic,
Yeah.
reach out to your CMG home.
I'm gonna bring up one more trick that we've done with the 203K, and a lot of people don't know you can do this. Is let's say the property under appraises, all right? We can flip it to a 203K, and now we get to use the as improved value, which is allowed up to 110% of the as is value. Okay, so we've got properties that didn't appraise, and we went back and we said, okay, we're going to replace the stove. All right. And then we were able to go back out there, get some quotes for improvements or whatever. We're going to do a couple of improvements, maybe clean up some fascia, and now we can add all that to the appraisal and use the as improved value, and you just turn something that didn't appraise into a deal.
Good deal. Yeah, that's
Another
why
little trick to use a 203K.
is the best tool in your tool belt if you're a real estate agent.
Yeah, but
thank you so very much.
Don't be afraid of FHA.
Don't be afraid of FHA. That should have been the name of today's presentation. Don't be afraid of FHA. Have a fantastic regular Thursday. Thank you so much for jumping in.
Thank you, everybody. Sorry about the sound.
See you next time here in South Florida.
Okay, bye.